Ever wondered how an empire is really built? Forget the glorious battles and heroic generals for a moment. The real story, the one that decided the fate of the ancient world, wasn't fought with swords, but with spreadsheets. This is the story of how Rome defeated Carthage, not on the battlefield, but on the balance sheet. Before Rome was the empire of legions we all know, it faced a rival that looked completely different. This rival was Carthage, a commercial superpower built on capital, trade, and a global logistics network that would make modern corporations jealous. Carthage wasn't just another city-state. It was a financial behemoth, a powerhouse whose economic model was a direct threat to Rome long before their armies ever met. The Punic Wars, the legendary clash between these two titans, were more than just a military struggle. They were a brutal test of two competing financial systems. On one side, you had Carthage, fueled by immense liquidity, a mercenary army paid in cash, and wealth that flowed from every corner of the Mediterranean. On the other, Rome, driven by something entirely new, national credit, the mass mobilization of its own citizens, and an unbreakable political will. The outcome of this economic war would not only reshape the map but would also write the blueprint for how empires finance their wars, manage their power, and survive a crisis. Understanding this battle of economic systems isn't just a history lesson. It's a masterclass in how global conflict works, even today. Carthage's power was rooted in its incredible commercial empire. Its ships dominated the sea lanes, connecting a vast network of trading posts from Spain to the Levant. They controlled the flow of goods, from tin and silver to grain and textiles. This wasn't a kingdom of farmers, it was a corporation with a flag. Their military reflected this. Instead of citizen soldiers, Carthage hired the best fighters money could buy: Numidian cavalry, Gallic infantry, Balearic slingers. This mercenary army was professional, deadly, and expensive. It was a force funded by liquid capital, not by a sense of civic duty. This gave Carthage incredible flexibility. As long as the money flowed, the army fought. When the First Punic War erupted, Rome was a land power. It had a disciplined citizen army but virtually no navy. Carthage, with its fleet of advanced quinquiremes, ruled the waves. The Romans faced a choice: adapt or die, and what they did next was nothing short of a financial revolution. They decided to build a fleet from scratch to challenge the masters of the sea. But how do you pay for hundreds of warships when your treasury is empty? The Roman state did something unprecedented. It essentially took out a massive loan from its wealthiest citizens. Patrician families were asked to fund the construction of warships, with the promise of repayment if and only if Rome won the war. This was a bet on the future of the Republic itself. It was the birth of national debt, a system where the state's credit was backed by the faith of its people. Alongside this, they implemented new taxes and mobilized their entire society for the war effort. Every Roman had a stake in the outcome. This was a war of national survival, not just a business venture. When the Second Punic War began, Carthage unleashed its greatest asset, Hannibal Barca. His legendary march across the Alps with elephants is one of history's most famous military feats. By rampaging through the Italian countryside, he wasn't just defeating legions, he was burning Rome's agricultural base, disrupting its supply lines, and terrorizing its allies. He hoped to break the alliances that formed the bedrock of Rome's power and credit. If Rome's allies defected, its ability to raise troops and taxes would collapse. After the catastrophic Roman defeat at Cannae, it seemed he was on the verge of success. Many of Rome's southern Italian allies did switch sides. The Republic was teetering on the brink of financial ruin. But this is where the fundamental weakness in Carthage's own model was exposed. Hannibal was winning battle after battle, but he needed reinforcements and siege equipment to take the city of Rome itself. He sent desperate pleas back to Carthage for more money and more men. But the Carthaginian government, a council of wealthy merchants and aristocrats known as the Senate of Sathets, hesitated. For them, war was a cost-benefit analysis. Hannibal's campaign in Italy was becoming a long, expensive grind with no clear return on investment. Their commercial interests created a political division that paralyzed their ability to support their greatest general. While Rome was all in, Carthage was hedging its bets. This structural flaw, this hesitation to commit fully, would prove fatal. Rome, despite its devastating losses, refused to break. The state went to extreme measures. They debased their currency, levied even higher taxes, and enlisted slaves and criminals into the army. Their system of national credit, based on political unity and the promise of future victory, held firm. Then, a brilliant young general named Publius Cornelius Scipio came up with a counter-strategy that was as much economic as it was military. Instead of trying to defeat Hannibal in Italy, he argued for a bold move: attack Carthage's source of wealth directly. The final showdown came at the Battle of Zima. Scipio's victory is often seen as a triumph of Roman military tactics, and it was. Rome had outlasted Carthage. It had absorbed unimaginable losses, innovated its finances, and maintained its political cohesion while its enemy faltered. The peace treaty was brutal. Rome imposed crippling indemnities on Carthage, a massive war debt designed to keep it permanently weak. Carthage was stripped of its overseas territories, its navy was dismantled, and it was forbidden from waging war without Roman permission. It was effectively turned into a dependent trading city, a shadow of its former self. Yet Carthage was still a city of merchants. Over the next 50 years, they did what they did best. They traded. They rebuilt their economy with such astonishing speed that they managed to pay off the massive Roman indemnity decades ahead of schedule. But this economic resurgence terrified the Romans. Senators like Cato the Elder began to see Carthage not as a defeated foe, but as a future rival. Cato famously ended every speech he gave in the Senate, no matter the topic, with the same chilling words: Carthago delenda, is Carthage must be destroyed. This fear led to the Third Punic War, which was less a war and more an extermination. Rome, no longer willing to compete, simply erased its rival from the map. The story of Rome and Carthage is a timeless lesson. It shows us that global conflicts are often clashes between entire systems, economic, political, and social. It's a rivalry that echoes in the modern world, in the tensions we see between trade-based global powers and mobilization-based national powers. It demonstrates how finance can be weaponized, how national unity can be a strategic asset, and how the economic model of a nation can determine its ultimate fate. The Punic Wars weren't just ancient history, they were a preview of the world we live in today. Thanks for watching. If you found this look into the economics of ancient warfare interesting, be sure to like this video, subscribe to the channel, and hit the notification bell so you don't miss our next deep dive into history. See you next time.